All right, good morning, everybody. It is Friday, October 15th, 2021, and we're going to get started here with our pre-market analysis on the S&P 500 futures market. So let's go ahead and jump up to our ultra-high time frames. Remember, we talked about this pretty much all week. The fact that we have all of these bullish indications off the lows. We saw it on the weekly, we saw it on the daily, we saw it on the 4-hour, all the higher time frames, and we even talked about this triangle here, this formation, the fact that we have a much stronger case for a bullish break to the upside of this triangle than any type of breakdown. So far we're getting exactly what we expected, and I think we talked about this all the way back on, what was it, going into the 11th and the 12th. Remember, on the morning of the 12th, let's go up to our daily here. The morning of the 12th, we talked about this bullish divergence right here. And we talked about, fair enough, it wasn't a closed candle, so we had to wait. But we did have that bullish case off the overnight low from October 12th, which I believe was Tuesday, if I'm counting the days right here. And we also talked about how if you did a retracement right here, we were essentially bouncing right off the 61.8 retracement of this specific leg right here. So that was also a pretty bullish indication if we could hold that level. And so everything kind of added up and made sense. And so this really is no surprise to see the market breaking out like this to the upside. Let's go ahead and jump to the ultra high time frames. Now, the quarterly here, remember this red bar was way down, but we got that rally, so now it's kind of starting to push back up. Still looking pretty much the same from the divergence perspective, looking very strong, no signs of exhaustion. And then our monthly, same picture as we've been talking about for a few days now. Our weekly, we're going to go ahead and have to... is my screen? Okay, it is. So we're going to have to go ahead and update this here on the weekly. So let's go ahead and zoom in a little bit. And remember, we had the bullish case all the way back on October 1st. In fact, we talked, well, I don't think we were here, right? I was on vacation. But had you have noticed that back on October 1st, really nice bullish divergence off the lows there from October 1st, showing bullishness on the weekly here and the daily and so on going down. So all the way back on October 1st, you could have already had a bullish bias. And from that point, or let's say the lows around 42.70, let's give it a little bit of room. It's now pushed almost 200 points from there. And then when we had our bullish case off October 12th lows, if we jump down to our daily here, if you caught that a little late and got in at, say, 43.25, we're now over 100 points up from there. So anyway, let's take a look at this. Got the bullish divergence back there that I kind of went on a diversion. And then right here, another bullish case, because remember, we pushed to a higher low, but the RVI pushed to a lower low. And then we talked about how this new weekly candle was also pushing to a higher low, but we were also getting a lower low. Well, look what's happening. Remember, this current bar is, still developing. So it's going to change. And so we're going to have to update this. So we got another bullish divergence off that subsequent bar, right? So this second bar here also held a nice bullish divergence. But now here we're just kind of starting to actually follow through. And there's nothing really divergent about the new candle anymore. So we're pushing to a higher low. We've got a higher low on the RVI. We're also pushing to a higher high and also kind of getting a higher high as well from that RVI perspective. So right now, the weekly has two beautiful bullish divergences off the lows. And then as we dial down here, we're going to start to see agreement on all of our higher time frames. So here's that daily bullish from October 1st. Once again, up over, I believe, 200 points now, or close to 200 points from when that occurred there back on October 1st. And then here we are, October 12th. Remember, the morning of October 12th is when we talked about that. And right now, what I'm seeing on the daily here is if this RVI starts to push up and we get above 54.4 or somewhere right around there, we could potentially start to get what could be interpreted as a bearish divergence if we don't break above the high here at 44.72. So I'm actually going to go ahead and mark this. Just to keep in mind, we ideally want to kind of break through 44.72 here, so that we don't have the potential argument for bearishness off the high that we made all the way back on, what was this, September 27th. So ideally we will break through the September 27th high at 44.72, and we won't have to worry about that. We'll just make it red because that's kind of line in the sand there. We'd ideally like to get through that for a bullish case. If we stay below it, there might be an argument for the bears there. So we'll just kind of watch that. Going down to the 4 hour, again, it's just going to show you the agreement here. We had the bullish stuff back at the beginning of October, and then October 12th got a nice bullish signal. And then as you can see, back the next day after that, October 13th, we probed down just in front of the low from October 12th. We came down just within a point or two of the low where we got the bullish divergence on the 12th. And then we got another nice bullish divergence on the 4 hour, which I think we also said was somewhat what we saw here on, well, on the weekly, I guess. So I'm mixing that up with the daily, but a really nice bullish indication on the 13th as well. And so this all has kind of, it's been in the cards. And this is what I tell anyone who I tell about my strategy. I tell them, you won't believe it, but there are mornings where we say we've got a pretty good case for something, and then, you know, like I said, 6, 7, 8 times out of 10, it ends up doing exactly what we expected, because in a way, I believe we're kind of looking at the market under the hood and looking at the overall strength in different moves, and being able to see that, we can interpret where the market typically will go when we see those type of things. Now, if we zoom out here, we are retracing, so we've got the whole push from the all-time high all the way down to the low we made on October 1st, and we are just breaking through 61.8. Keep in mind, we do have the right around 70 to 75% is also typically a pretty good resistance area for the bears, in this case in an uptrend. So we'll have to kind of watch right around here. Also keep in mind that the swing low back here on August 27th was 44.5275. So let me just go ahead and put a line there just to kind of highlight. It was 52.75, right? Yeah. So let me go ahead and put that on there if I can get that. I think 53 is good enough. So notice where we came up in the overnight session here and found resistance to the tick off of that level. Now the high we made was 53.75. The low here, 52.75, right? So we pushed through just by a point, 4 ticks, and now we've got a little bit of trouble with the bulls right now. So just interesting to note that. Getting through that current level, and remember that 72.50 or 72 that we just talked about, we want to get through that. So this swing low at 53, and then this high that we made back on September 26th, 27th is going to be important to get through for any type of bullish continuation. And so I think with the 4 hour, we've got a pretty clear picture here. Things look strong. We're testing that first expected area of resistance off that major swing low back there. And let's go ahead and start looking at some of the shorter time frames here. So we got our 60-minute, and with the 60-minute here, we're starting to get the first bearish indication. So if I go back to my 4 hour, we don't have any type of bearish divergence off the current high right now, telling me that we're not ready for a full-on reversal for some type of, say, 50, 100, 150 point pullback. So things still look pretty strong here from a 4 hour perspective. No reversal pattern in the cards right now. When we get to the 60-minute, we actually do get some exhaustion patterns up here. So we do have that on the 60-minute to keep in mind. Again, going back to the lows and all the bullish stuff we've been talking about for the last 10 minutes, same agreement on the 60-minute and all the other shorter time frames. Lots of great bullish divergences off the lows. And again, here's this triangle that we drew in I don't even know, maybe a day or two ago now, and there's the break through that channel. What else can we kind of look at here? We're also right at the 70%. I put it on here on this retracement scheme, the 70 and the 75. It is right there at the 70, and again, that swing low. Outside of that, I don't think there's anything to add to the picture here. So we just want to keep in mind the 60-minute, which is a pretty strong time frame, is starting to get a little bit of exhaustion. But keep in mind, we've seen that throughout these strong bull pushes. You see it as they continue to push here. Now, there's one other thing that I typically don't really talk about, but I think it's a valid thing to kind of keep in mind or kind of watch. The fact that we have this leg right here, you can measure that leg and see where we are on this leg, and we're essentially just about to make, I guess they call it what, like a measured move, where we pushed from 42.70, 44.20. So what is that? Sometimes doing math in my head in the morning is tough. Just under 200 points, and this push here is now hopefully going to get to just under 200 points as well, 43.20. So potentially push up into that 44.60 area. What is this? I don't know why I'm having so much trouble. 20 plus 30, 150 points. So 43.20, we would hopefully see 44.50, 44.70. So just kind of watching that, and you can kind of see these previous moves are typically, within that size or what have you. Again, I'm not too, this is not something I typically focus on, but I am watching that. So let's go down to our intermediate time frames, see if they give anything else to the story right now. And it looks like the 30-minute also showing you some exhaustion, just like we saw on the 60-minute. And then the 10-minute is essentially agreeing with each of these little pushes. Now, what I'm seeing at the moment is there's pretty extreme bullish divergence at the moment on this 10-minute chart. So we have a bullish divergence, and look where we bounced right off that previous resistance zone, right around 48. So that 44.48 right there, we came down right off the back end of previous resistance at 48, bounced off of it, and we're getting a 10-minute bullish divergence. Now, does that mean 100% it's going to continue to bounce from here and not break that low at 44.47 quarter? No, but that's something to keep in mind here. Even though we do have the exhaustion pattern, you can see we pulled back from 47 to 38, maybe 37, maybe a 10-point pullback, and started to kind of go sideways here. Typically, when you're in this type of push, if it's going to continue, not too out of the realm, not too, what's the word for it? Wouldn't be surprising to see it do this in a little 10-point range and then continue on its merry way back up. And we see that in kind of these little micro areas here. A little bit of sideways, you start to get the exhaustion. The bulls jump right back in, push it another few, 10, 15, 20 points, and then bring it sideways for a little, and then the bears jump in and kind of try to hold things back down. So we'll watch here. Remember, I did say we have this 10-minute bullish divergence down here right now that could potentially follow through. And here you can see on the shorter time frames, there's the 1 minute, there's the 3 minute. So we've got some decent bullish divergences right now. We'll see if there's any type of follow through there. And I think that'll do it for this morning's pre-market for our YouTube audience. It looks like things are still pretty strong. We do have from the 60-minute down some bearishness off the current high. So that means that there is potential for some type of retracement here. But because of the current context and the bullish momentum, that pullback might be very shallow. And in fact, that little 10-point pullback we got might be all that's there. Again, I can't predict the future. All I can do is tell you what my signals are saying right now. And there is potential for a pullback. How far that pullback actually will be, that is the question. If they do pull it back, we've got a lot of great levels below us. There's retracement schemes to watch. We have our eye levels, our prediction points, our daily levels, everything there to work on a good level to work to play off of. And that's what we'll discuss with our members here this morning. So for our YouTube audience, have a great rest of your day. Hope you got something out of this, and we'll jump over to the member section.